A breath of fresh air appears to have arrived, and Rolex looks to be under inflationary pressure. Before the recent wave of price corrections, some timepieces were selling as high as triple its recommended retail price. However, there seems to be a calm in the storm, taking those prices back to where they're meant to be, and all we can agree on is that it's been a long time coming. In this video, we'll take a look at some examples on the market movements and how the Rolex bubble appears to have already burst. What exactly is a bubble? For context, this is when the price of a product or an item lies exceedingly above its intrinsic value or worth. The intrinsic value for the Rolex brand is the high emotional and psychological component that connects the buyer of the piece to the watch itself. During the recent economic crisis and recession, there was a time when some selected Rolex watches went way above and beyond in price, some even costing twice the amount required to get one on a normal purchase. Examples of these increments a year ago: a pre-owned 18-karat gold Rolex Cosmograph Daytona with a green dial, nicknamed the John Mayer, was selling for around 52,500 euros on the Hodinkee shop, a top online retailer of timepieces. Earlier in March, though, that exact same model had an asking price of approximately 97,000 euros, which is almost double the price. Shocking, right? The sporty Rolex Milgauss version with a blue dial had a staggering asking price of 14,600 euros from the average 8,210 euro price it commanded a year ago. The Explorer 2 model also faced a similar issue when a roughly 8,000 euro value ran up to 13,000 euros over the same period. Each and every single one of these, as of now, are closer to what they once were. A healthy correction was just precisely what the market needed, and we're here for it. The US stock market enters a correction when an economic shock or a significant societal event prompts investors to pause, take a step back, and consider what's happening in the broader world. It's important to note the global lockdowns in the last couple years and the recent Russia-Ukraine war were one of those significant events in society that promoted that major pause. Graphs tracking the pre-owned market show a steady decline rather than a death slide plunge, and the experts think it's a good thing. If you were one of those speculators who jumped on the flipping train, though, we're sorry, but this reality will hurt. Pre-owned watch prices may have been steadily and rapidly declining, but how much exactly are the prices of luxury watches devaluating? According to Chronext, the Rolex Oyster Perpetual 36mm, which as of last year had a market value of 15,500 euros, moved in upwards of 22,000 euros by March, and now dropped back to 16,000 euros. The Patek Philippe Nautilus 5712 is one of the most coveted Patek Philippe watches produced, and it was also one of the most affected watches by the price decline. From its peak at around 216,000 euros in February, it went to 176,900 euros in June, which, to be honest, is a rapid value decline of 20%. Something truly similar can be seen in another masterpiece, the Rolex Platinum Daytona 116506. Following February 2021, the value of this watch likewise fell precipitously. The price of a non-baguette dial version dropped from about 204,000 euros in March to 117,500 euros in June 2022, indicating a 42% decrease. Nice, isn't it? According to the official prices of the United Kingdom, the Rolex Daytona, as of September of 2021, had a market price of around 24,000 euros, only to rise to 34,000 euros barely 6 months later in March. In September this year, it's less than or around 26,000 euros. Let's look at the Rolex Submariner now. September last year, with a market value of 11,500 euros, it had an increase of 13,000 euros in March, and then, by September this year, crawled down to 11,000. We can go on, but it's honestly such a refreshing breeze at this point. The data certainly backs up the correction theory, and it's not just on Rolex. Models from Patek Philippe falling by almost 12% in the past 6 months, and Audemars Piguet, which has seen prices drop by 9% in the past 3 months, but bottomed recently, although now rising slightly since, were part of the top 50 most in-demand or traded watches. Over the last 6 months, all had their respective falls, a vital piece of information gotten from the Subdial 50, a tracker made by the company Subdial, a top British platform for trading watches and watch charts. Did you know some watches didn't change much during the inflation as well as the period of the market correction? The Tudor Black Bay 58 79030 is a good example of this. After the most dramatic decline in market prices, the piece was still sold for essentially the same as it did 2 years prior. This happened because it didn't have any hype, causing a dramatic price increase when some other brands had theirs. And this, in turn, caused the market to still offer a correct price. The ultimate result of this meant its value did not crash. Another example of these watches that basically remained unchanged is the classic Omega Seamaster James Bond watch, for ideally similar reasons to the Tudor Black Bay 58. The crucial thing to understand here is that the price drop majorly affected the most hyped watches that increased the most in value during 2020 and 21. Understanding why the price correction happened, one of the reasons for this is cryptocurrency. The high valuation of cryptocurrency brought on a massive influx of new luxury buyers, which led to a price increase on multiple brands and models. When a crypto crash sets in, the stock market scrambles in a bid to recover some of its losses. In times like that, luxury timepieces are the last thing on the average investor's mind. However, this reduction of new buyers creates more supply of timepieces and then finally causes watch prices to dip. Did you know that the co-CEO of Chrono24, Tim Strack, said the average trading volumes on the site increased by quite a bar, above 50% in the first half of 2022? He added that in the first quarter of the year, a 35,600 euros Patek Philippe Nautilus 57HA watch increased to a whopping 244,000 euros value on the site. The same piece is now listed for just about 193,000 euros. The larger perspective. How long would these prices stay that way? Most watches have lost 15 to 30% of their worth as a result of the price drop. On fewer occasions, the decrease stands by 35 to 40%. And yes, that is a lot for any price decline, be it stocks or watches. If we take a step back, these prices are just back to where they were 6 to 12 months ago. If you bought a watch at the absolute pinnacle of the inflated costs, you're probably going to be quite disappointed, since it's now worth a lot less. But there's nothing that says it can't return to its original value. In reality, everything implies that watches will continue to rise in value, as they always have done historically, especially considering that the luxury watches in question are still significantly higher in value when measured over a 12-month period. How long do market corrections typically last? For starters, corrections are basically sustained declines in the value of a market index or the price of an individual asset. It is generally agreed to be a 10% to 20% drop in value from a recent peak. When these volatilities pick up, the natural question on people's minds is, when will it end? Market analytics firm Yardeni Research has thankfully released quite an amount of data of corrections dating back up to multiple decades. Since the beginning of 1950, there have been 39 official corrections in the S&P 500, and judging by those, market experts speculate the average stock market correction takes 6 months to find a bottom. What next? Has the luxury market crashed completely? Many of the factors causing this price reduction here are basically economy related, and have absolutely nothing to do with the actual value of a good watch, which means there's no need to panic. Luxury watch markets are still in great demand, and the most sought-after models have extremely extensive waiting lists, which will continue for a long time. The dip here shouldn't induce mass crypto-style dumping events, so if you're planning on selling your watch just because of these fears, you probably shouldn't. What's your opinion on the current bubble, and do you think it's burst? Have the prices already hit rock bottom? Share your thoughts in the comments section.